They're here. The titans of TradFi, traditional finance, just got the green light to move billions into one of the most serious Layer 1 protocols in the game. Hedera, the US-regulated powerhouse, Anchorage Digital, didn't just add HBAR custody. They flipped the institutional switch. This is not a fluffy partnership announcement. This is the regulatory bridge that allows sovereign wealth funds, pension funds, and every asset manager with a three-letter acronym to quietly, safely, and compliantly stack HBAR. The price is currently trapped in a coil looking deceptively calm, but this institutional adoption catalyst is the fuse. We are talking DeFi access, staking yield, and corporate treasury eligibility. Get ready, because the chart is about to pay attention. Welcome back to the channel, everyone. If you're here, you're not looking for hype. You're looking for the alpha backed by data, and today, we have a monster. Before we dive into why this Anchorage news is a game changer, and what that tight HBAR price action means, smash that like button and subscribe. You need to be in the know when the institutional money moves, and we track their footprints here faster than anyone. Let's go decode the hash graph. The news broke via X on December 4th. Anchorage Digital now supports regulated custody for Hedera's native token, HBAR. Why does this little update from a digital asset platform matter more than a major exchange listing? Because Anchorage isn't just an exchange, it's a federally chartered crypto bank in the US. They are the same level of institutional gatekeeper as BNY Mellon and Coinbase custody. This is the golden ticket for Hedera because it solves the biggest problem for TradFi's compliance and security. Banks and massive funds, the folks who manage your retirement, cannot touch a token unless it is held by a qualified regulated custodian. Now, HBAR is in that exclusive vault sitting right alongside Bitcoin and Ethereum. It's the ultimate seal of approval. But it gets better, and this is where the suspense builds. Anchorage isn't just offering storage, like a fancy digital coat check. They are allowing institutional clients to trade HBAR on-chain and, crucially, stake the token compliantly to earn yields. Think about that for a second. The biggest institutions demand two things: security and yield. The Anchorage platform delivers the security with their enterprise-grade HSM, or hardware security module, setup, making it virtually unhackable for their clients. The yield comes from staking, a compliant way for these behemoths to grow their enormous bags without the risks of opaque, unregulated DeFi protocols. This feature is backed by the Porto platform, essentially letting conservative money play in the Web3 sandbox, but with a full helmet and padding. This entire setup screams regulatory legitimacy in the US market. The Office of the Comptroller of the Currency Charter means every venture, fund, OTC desk, and corporate treasury can look at HBAR and check the box that says, yes, we can touch this without getting sued. It provides a stronger foundation for Hedera's next phase of growth, which is exactly why the technical chart is winding up for a major move. It's the market just waiting for the fundamental story to hit the books. Now we merge the finance story with the network stats. You can't just slap a suit and tie on a token and call it institutional. You need usage, and Hedera is delivering. According to the analyst Crypto Winkle on X, Hedera's network has crossed 9 million mainnet accounts. For a network primarily focused on enterprise and government use, that's not just a vanity metric. That's proof of serious, non-speculative utility. This reflects steady onboarding of real users and applications that need predictable fees and 2.9-second finality. It's the difference between a high school track star and an Olympic sprinter. But here is the truly jaw-dropping figure. Real-world asset tokenization, connected to Hedera, has now reached a staggering $24 billion. Let that number bounce around in your brain for a second. This is not some speculative meme coin market cap. This is real economic value. Real estate registries like the recent Memorandum of Understanding with Georgia's Ministry of Justice, supply chain tracking, and financial instruments. RWA platforms demand the absolute highest level of reliability, and Hedera's governance, backed by names like Google, IBM, and Boeing, provides that enterprise-grade trust that no anonymous blockchain can match. That council is the digital equivalent of a full house of Fortune 500 companies. My analytical take is simple. The Anchorage custody is the financial on-ramp, and the $24 billion RWA value is the fuel for the next surge. The price may be ignoring it right now, stuck in its consolidation phase, but fundamentals always win in the long run. You don't get $24 billion in value and 9 million accounts without massive, eventual demand for the native asset that secures and powers the fees on that network. Right. So the fundamentals are screaming buy, but the chart is being an absolute tease. We are trapped in what analysts are calling a symmetrical triangle on the daily chart. This is the ultimate boxing match between the bulls and the bears, leading to compressed volatility before an explosive breakout. The price has been trading in a tight range, stubbornly avoiding the volatility we see in the rest of the crypto market. The recent price action saw a sharp, liquidation-driven downswing, pulling the token lower. But this was a necessary liquidity flush. It cleared out the over-leveraged traders, the impatient, greedy few, resetting the market's open interest. After that shakeout, the coin regained the mid-range level, reducing the heavy downward momentum. This is textbook technical cleansing. However, the MACD, or moving average convergence divergence, is playing coy. It's sitting in a neutral to bearish posture, with the MACD line just below the signal line. The histogram is showing light green, which is really just a hint of reduced negative momentum, not a confirmed trend reversal. We need that MACD crossover to the upside for the definitive signal. Even the Chaikin money flow, or CMF, is printing at a mildly negative 0.05. This confirms that while institutional money is getting positioned via Anchorage, the general capital outflow hasn't fully reversed into aggressive accumulation yet. The chart is basically telling us, I'm ready to explode, but I need a nudge. That nudge? It's the realization across the wider market of just how big this Anchorage and RWA news truly is. This tight consolidation is honestly a gift, giving you the chance to load up before the inevitable surge. Don't be the trader who buys the confirmed breakout when the price is already up 30%. So, what's the move here? We have a blue-chip fundamental catalyst colliding with a tight technical compression. This is a high-conviction setup. The most important thing is to watch for the price to break convincingly out of that symmetrical triangle. A sustained daily candle, close above the descending upper trend line, is your confirmation. That is the point where the liquidity will enter aggressively. Given the Anchorage news and the $24 billion RWA story, my strategy is to dollar cost average into the lower end of the current consolidation range, right where the market just bounced from its liquidity flush. You are betting on the long-term, utility-driven demand, not a day trade. That's the full, unvarnished truth on Hedera and the Anchorage Digital catalyst. This is the institutional-grade validation we've been waiting for. I appreciate every single one of you for diving deep into the hash graph with me. If this analysis gave you clarity in a confusing market, do hit that share button and let the world know where the real utility is building. Now check out my other videos. Until the next market move, stay sharp, stack smart, and keep crushing the crypto game. Remember, I am an analyst, not your financial advisor. This is not financial advice. The crypto market is volatile, and you should only invest what you can afford to lose. Always perform your own research and due diligence. Digital asset investment carries significant risk.